And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. It's our last show of the year. Can you believe it? A whole year. And all week long, we've been asking our guests to tell us which ETFs they think mattered most in 2019, which ones could break out in 2020, and the ETF of the decade. Let's start with 2019's ETF of the year. Not necessarily the best performers, but the ones that had the biggest impact on the ETF industry. Here's what some of our recent guests have said so far. Bonds, home construction, semiconductors, and ESG stand out as major themes here. Joining me today to discuss 2019 ETFs, Jay Jacobs, head of research and strategy at Global X ETFs. John Davi is the founder and CIO of Astoria Portfolio Advisors, and Brendan Ahern, CIO of KraneShares. And Jay, your pick for 2019 semiconductors, we've had several times people pick that. Why SMH? Again, that's the semiconductor ETF.
I think this was a great example of using an ETF to play a very powerful macro trend, which was the US-China trade wars. Anything semiconductor related or tech hardware related really became, the daily way of playing that trade. And of course, heading into 2019, people were very bearish on the space. It turned out to be not as bad as expected. That led to very strong performance across semiconductors, across China technology stocks, and across Internet of Things, consumer electronics.
Hard not to argue tech, again, dominating things. But John, as usual, you come up with an unusual choice. IHDG. This is Wisdom Tree International Hedge Dividend Growth. Why international and why dividend growth?
Okay, so, if you told me at the start of the year that a broad-based developed international market would have been up 34%, I think most people would be surprised by that. But it is the best performing broad-based EFA type ETF, okay? It does hedge out the currency, and we can talk about why I think that's important. But look, the bottom line is that it beat its benchmark by 1,200 basis point year to date. And it beat the S&P 500 by 400 basis points.
But that doesn't necessarily mean it's going to outperform next year. We know that. Just because it did well this year, we know the future. Future does not necessarily immediately follow what the past has done. That's an axiom, of course.
Over the last 10 years, though, broadly speaking, U.S. has really outperformed the rest of the world. So I think that this will do well in the years to come.
And why dividend? Why dividend growth? Why is that an important aspect here?
There's two quantitative screens, right? One is it picks high-quality stocks. So you've asked a number of times, what does quality mean? So specifically, it's companies that have above average ROE and ROA. Okay, that's how they define quality. And the other half is companies with above average earnings growth.
Yeah.
So to me, that's very intuitive. You're picking high quality stocks that grow their earnings.
And Brendan, you're the China expert here, not surprisingly. You pick a China ETF, happens to be one of your own, but this is KBA, the China A shares. A shares is mainland China. It's done well this year. We're up 30%, right? Why is it going to outperform or why do you think it was the most important one for 2019?
Well, I think in general, who would have thought China would be one of the best performing, in contention to be the best performing country globally? This is a trade war. KBA represents MSCI's definition of Chinese A shares going into their indices. And one that's led to about $50 billion worth of inflows year to date via the Stock Connect program. So this is foreigners are buying mainland China, MSCI inclusion. At the same time, it's what Chinese investors believe what China is going to do going forward. Their view, their opinion of their economy, much more optimistic, much more positive, and I think those are two trends that will continue. The MSCI inclusion and Chinese investors believing the local economy is doing well.
We're going to talk.